Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So last Friday we talked about the oscillator hitting plus 70. That's pretty much when a lot of us went from portfolio approach to let's see if we could work off this overbought condition. And the way it happened, I think, was a little hard. Why was it hard? Just because instead of like the overall market taking a breather, you had the strong stocks friggin' just take the heads off of the shorts, kind of like the financials. And then, then yesterday, when it seemed like markets could roll down a little bit, oil took off, which actually wound up being a good trade. But in the meantime, you had, just technology and high beta tech really looking more broken every day, with some signals though. And then you had the small caps that gave us a good sell signal. At least, some guys got out there and were able to make some money short. But today, if you tried buying it, like I tried buying it a little bit today, a little paper cut. So all in all, not the easiest environment. It's never easy. They're never giving the money away, but, it's just lots of different divergences. Because then you have the TLTs that, look like they're going to bottom every few days, and then you take it home long, and then it gaps down the next day, and then it's been hurting traders the same way, people have been trying to play an oversold bounce in gold or the miners haven't found it. So you're getting a lot of extremes. Extremes are tough to handle. Anyway, you look here at the S&P. At least the S&P kind of made a little sense, right? The S&P, here was your move lower. Here's your snapback. Here's your descending trend line, okay? Above the 8-day right there, that was your accumulation. Went above the prior high, and now it's, it's interesting because it closed below, okay? Yesterday gave you clues to get out, which is why I was not in it today, except for I tried a few times when it looked like we could reclaim the 8-day. But, here's your sell signal, okay? First topping tail. You didn't see a topping tail this entire time. Topping tail when you had reasons to rally, like oil up 7-8%, and now we close below the 8-day. So are we going to just engulf this tomorrow like that and create a nice upper flag, or do we test a little bit bigger resistance, bigger support down here near the 21-day? So at this point, I think most traders would like to see some kind of down open to buy, which would be great. If we get an up open tomorrow, it'll probably be a little harder to deal with. The Q's just, really tough. Why are they really tough? Because, first of all, people are like, oh, why aren't you buying the dip yesterday in the Q's? I don't buy day one engulfing down. I said that on Twitter. I just want to show you why. Because look at the power here. Okay, first of all, they have 1, 2, 3, 4, 5 days looking as if maybe tech plays catch up, breaks out like everything else. And then yesterday, no. What did it do here? It engulfed the 8 and the 21 days. So day one down probably scares anybody long here and says, oh, maybe we're not going to break out, let me get out. So people are mispositioned, and that's how that happens. So now all of a sudden, the Qs, again, look like just one big channel. And at this point, it's not showing relative strength, holding the upper end like it did here for a breakout. Now it's just back in here, and now it's just a trade. Who knows what happens? Tomorrow you open lower, maybe it's oversold for a bounce, maybe you get a red dog reversal around this pivot, which is 115.29 or not. But it's below the 8 and 21 day. Didn't make a new high when most indices did, so relative weakness in the Nasdaq. The Russell a few days ago gave you a sell signal. What's a sell signal? Well, a sell signal is right here. First time it broke below a prior low, right there, closing the lows. And then even more important, it rallied back, didn't engulf it, but got rejected halfway through. So if you missed this day, this was your short, and now, what are we, 133.89 down to almost 130. So this is a likely spot to find some support, but it's a little no man's land. You have the 8-day curling down, the 21 days down here. This was your last prior gap. So nobody wants to start buying it here for maybe a move down to there. The same way if you started shorting the Russell here or started shorting here, very hard to stay with it because who knows where they go. Better to wait for a signal. And this was your first signal to take some profits and maybe sell. And now not really a signal yet to buy. Hopefully, maybe tomorrow we get some kind of red dog reversal, and that could be your buyable pullback. Then you have the stocks like Goldman Sachs that just, friggin' through the roof. This was the first igniting move, and then it did go sideways for quite some time. So built a nice upper level bull flag, let the 8-day catch up, and now 1, 2, 3. Day count, we talk about it, right? I'm not in it. I'm just saying this was like almost a day one. Here's your, add to it on day 2, and here's your sell day 3. If it's day 4, day 5, it is what it is. But, this was a nice consolidation to continue. Some acted better than others. Look at Bank of America. That had a bit of a topping tail. Okay, here, day one out. You don't short this because then you would probably not have been able to stay with it today. Okay, so today if you shorted versus a high, you know what, maybe you made a little bit of money. And now we'll see, you know, how it pulls back to the 8-day. It usually does. Even after this big move, it did pull back to the 8-day. And here's where it is. That's why you don't want to buy when it's too extended from there. I have to apologize that, you know, I don't love to short. Every now and then I do short when it's, you know, conducive for it. But, you know, yesterday when some of the high beta tech names didn't act well, okay, obviously wasn't in them. I've been in a few of them. You know, Facebook was really just a blaring short. Why was it a blaring short? Because of this. Okay, first of all, here I was looking at it. It looked pretty constructive, right? I was talking about potentially an inverted head and shoulders pattern. Left shoulder, head, right shoulder, nice little bull flag. Maybe looking like, bull flag right here, looking like it might take out the 21-day and fill this gap if tech was going to be strong. Didn't know if tech was going to be strong. Tech was lagging. Then what happened? Boom. That right there was a big engulfing candle taking out a 5-day range. That's why I didn't go home long Facebook. But what I should have done is if I thought tech was going to be weaker, I should have went out shorted, considering it just failed at the 21-day, closing below the 200-day, not good. And then you could have made money short here instead of just not trading it, which is what I did today, not trade it. So at this point, you know, what's Facebook going to do? You know, it's got a reactionary low right here, so it might try and hold it a little bit. But if it can't, like, take back, you know, more than half of this, you know, you can see more downside. If you look here at the weekly chart, you know, which we talked about it needing time. Well, this weekly chart got broken right here. Came up, kind of retested it, couldn't take back a third, and now turned lower. So this could be a bear flag for continuation to the downside, and then, you know, you could see a move down to here, which would not be good overall for tech. Amazon, not quite as broken, but, you know, it also, you have your accelerated trend here that broke, couldn't get back above it on the weekly, and now it looks as if it could work its way back down to here. Okay, I know I tried to play it for a red dog reversal today, and it just didn't work. Got a little paper cuts, but they still hurt. What do I mean by a red dog reversal? It was down a few bucks. I thought maybe it goes green, catch a nice trade back to the moving averages. It didn't. So anyway, I'm not in it. But after 1, 2, 3, 4, 5, 6 days, kind of hard to be shorted. But if you've been trying to buy it, it's not easy either. Below the 8 and 21 day, you know, I think because Facebook is below the 200-day and it's a high valuation stock, some of these things are saying, hey, why Facebook, which has growth and had a decent quarter, you know, can't rally? Why Amazon, even though the numbers should be good, and it's because of the size of the move that it's had. So it's kind of in no man's land right now. So you just don't want to get caught in no man's land if you can't handle it. You know, Google also below the, you know, the 200-day. It's hanging on the 200-day by a thread now. This too, you know, kind of broke support here, came back up, retested it here, and turned back lower. Now we'll see if this area holds. You know, you take a closer look here, and, you know, this spot gave way. What did it do? It kind of got rejected into the 50-day, not the 21-day. Went a little higher and then turned lower yesterday. Day one down, engulfing the range, and then continuation. Now we'll see. Lastly, before I have to jump, because it's Thursday and we have some meetings and whatnot, Apple. Okay, Apple was a decent trade down here when it crossed above the 200-day. Then all of a sudden another trade here, and now it's, you know, starting to break this upper area. So we'll see what happens if it wants to test the 200-day down here for a trade. But rolling over, some people are still talking about the potential of this, which would not mean we're going to be going, you know, a heck of a lot higher everywhere. That would be more, you know, potential weakness in tech, left shoulder, head, right shoulder. But we'll see. You know, we'll see what happens here at the 200-day. We'll see what happens there. I'm still a believer in Apple, but I'm not going to sit in it when the technicals are a little faulty. Lastly, Baba. I was dead wrong. What do I mean by being dead wrong? I thought the next 5 points would be up. I did not trade it for that, but I was like, hey, you know, you're looking right here. This is when tech looked like it was going to play some catch-up. Okay, looked like it was going to take back the 21-day, get to the 50. I was thinking just because Google and some of these things were going to the 50-day, like, why not Baba? And meanwhile, on this day, it changed my perspective. Why? Because this day engulfed this day. If it was that strong, that shouldn't have happened. So I stopped playing it. I got out. And then today, you know, if you want to just look at a spade, you have a pole, a flag, and the bull flag broke to the bear flag broke to the downside. So if you didn't get out yesterday, you had at least some room to get out today. And now it's right back at the 200-day, which isn't a momentum signal to be staying in. It means more caution. So with that said, you know, I haven't seen this many crazy divergences in a while. You know, sometimes you see some divergences, some others, not at this extreme. So I'm, again, long a little oil overnight. I was long a lot yesterday. It was a nice move in oil. We talked about it real quickly. The USO wound up giving me the move that I thought. Remember I said it can get back to the October highs? Well, got pretty darn close. Okay, took it home yesterday. I have less overnight, but I still have it. I want to buy a dip here, probably get a gap fill or something tomorrow. Some guys actually shorted 1150 from the VTF. If you did that, that's cool. I don't think this move is over in oil, but whatever. So, but I'm not in anything else. I tried buying a little bit of a dip in the Russell and the S&P, and I'm like, you know what, I'm just not going to take it. I'd rather see it down open and get better spots to buy just in case, because there are some signals that, yes, we have rotation, but there is some damage. And does that mean, the high beta tech and the Qs and technology could be isolated for everything else to rally? Maybe the money's coming out, or is it a precursor that, that we have a little bit of trouble ahead? So that's why I'm watching 2193. I don't want to see the S&P do a breakout failure, because that could lead to lower prices fast. So that's why today I was a little, quick to get in and get out, because I didn't see it develop, even though we had a little bit of a bounce into the close. So that's why I'm flat. Plus, my history on Fridays are not great. I'm in Short Hills. That's where I'll be tomorrow. I'll try and communicate, but at this point, let's let the chips fall where they may, and then figure out how to position next. I don't think it's over, but from plus 70 to minus 7, that was good to take off some risk. Now, if we see some things develop, maybe we can get back in, for some kind of Santa Claus rally, but it's only December 1st, and Santa Claus is 3 weeks away, so we could have a lot of this choppiness back and forth. So don't do anything that makes you uncomfortable. Have a good night.